Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about my weekly outlook, corn at the halfway point. Last Friday, March 1st, marked the halfway point of the 2018-19 marketing year. And usually this time of year, the market begins to focus on new crop acreage and production prospects for the upcoming crop year. It's sort of shifting away from consumption in the current marketing year. I think the uncertainty surrounding trade negotiations and some of the lower use in many of our domestic corn categories of the balance sheet require looking a little bit more detail at what we could see for consumption in the 18-19 marketing year, and that's what I'm going to be talking about today. Currently, corn exports are forecast to be at 2.45 billion bushels by the USDA this marketing year, and that's up 12 million bushels from last year. In this graph, you're seeing total commitments for corn through week 25, so this year that'd be February 21st. And as you can see, we're basically exactly on pace when you take into account sales and accumulated exports thus far this marketing year. We're at 1.557 billion bushels, and last year we were at 1.546 billion bushels. And you can see the breakdown a little bit here. We've been exporting strongly this year to Mexico, South Korea, Japan, Colombia, mainly our major exporters. And, there's a good chance this will continue. There's sort of a note of caution on this, as that some of the major world corn exporters, other than us, and we're the biggest by far, have had pretty good crops this year. When you take Brazil, Argentina, and Ukraine into account, right now their projections for their production are up 1.4 billion bushels over last year. And I don't see that weakening very much. Argentina's got a good crop they're already starting to harvest. The second crop in Brazil is looking like it's in pretty good shape. It could deteriorate, but right now it's looking pretty good. And Ukraine's already harvested their record 1.4 billion bushel crop, and it's already in the world market. So when you think about, there's going to be some serious competition in the export market the second half of the marketing year. There's some other factors as well, like falling wheat prices. We might see wheat move into feed rations overseas. And there's the Asian swine fever spreading throughout Asia. If that got into South Korea or Japan, that could hurt us as well. Hanging over all of this is the trade negotiations with China. If we get a resolution of that trade deal, it could overwhelm all of these factors I've just talked about. Right now, we're on pace to hit the current USDA projection, but I think it needs some careful monitoring because we've seen exports slow down a little bit over the last month. Corn use for ethanol production has weakened quite a bit over the first half of the marketing year. And as you can see in this graph, particularly October, November, December, and January, you keep seeing corn use and ethanol production deteriorate from last year, and February will not be any different. Currently, the USDA projects it at 5.575 billion bushels. I'm still optimistic we can hit that, and there's a few reasons for that. EIE's, the Energy Information Agency, is projecting gas prices at $2.47 a gallon in 2019. That's down from $2.73 in 2018. And they're also projecting increased gasoline demand in the second and third quarters of 2019. If that comes to pass, that'll be very supportive for ethanol production as we move into the second half of the marketing year. If that doesn't come to pass, you may see the USDA revise down ethanol production use for corn. We're still seeing pretty strong exports in ethanol. I think we're on pace to do a little bit better than we did last year. But overall, we need gas demand to tick up. E15 may help if it goes through. But right now, we're sort of counting on gas demand picking up in the second half of the marketing year. I'm optimistic it'll happen. And that's another thing that needs monitoring as we move through the second half of the marketing year. Feed and residual use for corn is another area where we've seen some weakening this marketing year. In the February WASDE report, after we got the December 1st stocks report, USDA lowered their projection by 125 million bushels to 5.375 billion bushels this year. I think we might be able to see a little bit of surprise in the second quarter with a little bit stronger feed use. We see the cattle on feed up a bit. The first half of the year, pig crop looks slightly larger. And with lower ethanol production, maybe we'll see less distillers' grains in the ration and maybe a little bit stronger corn use. That March 1st stocks report is going to be important to figuring out how this is going. Right now, I don't see any more downside to feed and residual use. I think that 5.375 at the lower end of what it could be, and it could actually strengthen as we move in the second half of the marketing year. Through the first half of the marketing year, the U.S. average farm price received for corn, I've estimated around $3.46, which is below the USDA midpoint projection of $3.60. I know there's a lot of bullish attitude about corn out there, and I think that's for good reason. We're seeing ending stocks just a little above 11%, and there's some speculation on the current projection for corn acreage in 2019. USDA pegged it at 92. A lot of market observers are saying, this cold and wet weather we've seen over large parts of the Corn Belt, poor field work in last fall, and the high fertilizer cost may see that corn acreage be down. I'm not sure we'll see that show up in the March 29th prospective plantings report. And the weather and price development this spring will probably be the key in whether that'll happen, and we'll find out for sure in the June acreage report. Overall, if there's a trade deal and the kind of use we're seeing right now, I think we're on pace to hit USDA's projection, if not a little stronger. It really is coming down to exports and ethanol use for corn and what kind of production we'll see in 2019. I'd like to thank you for your time. You can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farm.daily.illinois.edu. I look forward to seeing you around the state of Illinois.